Good afternoon, Scott Rella, T3 Live. Welcome to today's recap. So it's 5 after 4 and I have to get out of here quick. So I'm going to speak fast. So follow along, get ready. Today is Wednesday and felt like a nothing from nothing day. The markets are up, but some stocks, in my opinion, didn't act that well, especially in the camp that we usually look at as far as some of the high beta names, as far as just a few situations across the board. Yeah, you had some oil names up, you had the S&P up. And then you had the Russell and the bios hang on by a thread, and then you had a few different cross currents. So I'm just going to get right into it. So you look at the chart of the SPX, you will see, last time the market was under a little bit of pressure. This is when all the big dogs started saying we're going to have a big correction, whether it was Tepper or Ralphie Boy or whoever it was, and it didn't happen. We broke above it, and then we had a nice trend up higher again. Recently, same type of trend right here. Looked as if we could break the 21-day, and we didn't. Today, not much not much action. So you had some strength in the banks and Microsoft and Intel and IBM, and that's what made things look a little bit stronger than they were. You look at something like Intel. Wow. Multiple years ago they called this dead money, and then all of a sudden look at this gap up you had here where you could have went long against, even if you didn't have a long thesis for Intel, was protected, and then boom into earnings. Talked about this on the monthly chart. Look at these monthly charts and a lot of names. All these monthly charts that have been dead, all these tech names, that went just say parabolic in the year 2000, just started waking up. So don't just blindly short these things because there is a lot of room. I've also talked about Microsoft. It was on my 2014 thesis. And look at that. Same similar pattern to Intel, where it was dead money for a long time, woke up here, and then it even cleared this. And now look at this move. You go to the daily chart, it even looks bigger. Look at the size of that. And I know it trades like crap, and that's why it's hard for short-term traders to trade them, but every now and then there's a really nice wide range bar in Microsoft, and that's where a lot of the strength was today. Also, IBM had a big day on that news with Apple, better than Apple. So I think sometime during the day I tweeted out with Apple that I think it could have acted better, that yesterday it closed in the lows, showed a little relative weakness. Second day in a row it showed relative weakness. Earnings are until next Tuesday, and then lo and behold, people on the virtual trading floor was talking about being short Apple, and it went from like up 60 cents to down 50 cents, and congratulations. You caught it, you caught a cute short. I do think it's a better long than a short, but we do time the market day to day, and if you book your trade, you can always get out of the way. You look at this trend since last quarter's earnings, intact, strong. Look at this gap up that held. That's what started my iPhone to head prediction of 100 plus, and I know we hit 98 today, and we didn't get there, but there's a lot of year left, and lots of trades along the way. You now have a double red bar in the midst of some strength. So to me, it looks as if this 8 day is going to break. Some people took it home short. I actually didn't, just because it's been so good to me on the long side, and that doesn't really make much sense. But anyway, short term, it feels like it wants to hit the 21 day. So for some reason, when it had a lot of reasons to go up today with the deal with IBM, the enterprise scenario, blah, 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 it didn't. So hopefully you're lighter, and if you're long from here and you're ready to hold it through earnings this season, that's what you do, then that's something different. But as a short-term trader with earnings on Tuesday, today was probably a day to lighten up, and some people might have even went short because this was your first signal in a while. We'll see what happens there. As far as quickly other trades, Google has earnings tomorrow. Well, not tomorrow. Yeah, tomorrow, Thursday. It too tried to break above a pivot, couldn't, closed red. Maybe they want to get some people out before the number. So I don't like to trade a stock the day of earnings or the day before, because it could always, square up positions. We'll see where it is tomorrow, and then maybe talk about some kind of option strategy. I'm not sure yet, but that we've been talking about this since it broke the descending channel here and retested it and then got above here. And it's been a lot of nice technical trades along the way. But why would it want to go to new highs prior to earnings when there's a lot of risk there? Amazon also gave another day, pushed through, and then kind of had a doji. This type of action starts to get a little bit more tricky because you have a really nice trade last Friday when it went above this 338, gave you a follow through, held in there, pushed above, but hard to get much power when you're coming into such big resistance. And again, this has to deal with its own earnings, so at least it gave you a technical trade without having event risk. Then on the weaker side, you have the laggards that played a little catch-up that look a little faulty. One of them being Netflix. Netflix, awesome trade. down here. Great trade from off the charts. Even a nice trade when it triggered above here. And then you had your bull flag. And then it had a high level consolidation up here. Okay, and that's after breaking out above a prior high. So a little bit of a trap, a little bit of a breakout failure. Came in, we caught a nice little long right here. Okay, remember that trade? It was 2 days ago. And then it kind of came back in, and it's not really ready. So to me, I'm not saying it's a blaring short, but it doesn't look ready for a long. And if we did get a little weaker, maybe some people will be looking to short this below 442. Sort of the same thing with Tesla. Tesla gave us a lot of nice trades in the past few months. One of them being right here from the long side. And then I don't think many people were looking short, but it did break this ascending channel. That at least got you out of the way. Little pivot long trade a few days back, and then came right back in. Usually if things want to go higher, they don't come right back in. So there are some people thinking short, and you know what? I actually took a little bit short overnight. Yeah, Red Dog took a little bit of a short. Because I know, if it starts breaking below 215.45, everyone's going to be barking at me, why don't I ever short anything? And that would be probably a good spot to short. So we'll see what happens. Doesn't play into my strengths, but it is what it is. Some people looking at cores for a Red Dog reversal. That does play into my strength, and you had one of those today tactically. There's always right ways to enter and exit stocks. This has become very weak. Short below this ascending channel or rising trend line. Then it broke below this one, and then today, talked about it in my webinar, traded below 78.99, put a low and came back above and gave you a short-term tactical trade. Let me show you real quickly on the 5-minute chart. 5-minute chart gave you a really nice entry. I love seeing this type of pattern where it triggers lower first, okay? So it gets some shorts in there real quickly and traps and stops out some longs. So that's what happened in this first portion of the morning, and then it got really tight. And then this is when I got long and sold some into there. It was just a nice tactical trade. If you're in it for a day-and-a-half trade, because some Red Dog reversals last that long, okay, see how it handles this gap up here. But all in all, nice tactical trade. If you got long around 79.60-ish, you had a nice stop, and you could have made some money. On the flip side, a lot of you know that I've been trying to be long BlackBerry. BlackBerry's been a good trade from the $10 area since last quarter earnings. All of a sudden, last night I had to go home and deal with all the everyone yapping away how BlackBerry's going to get crushed because of Apple and IBM. And I was like, you know what? The chart looked good. I had no idea news was coming out like this, but what I do know is how I could handle the trade. And typically when I get caught in a situation, I give it 15 to 30 minutes, let it put a low in, maybe even buy a little bit versus the low just in case it's emotional, sell some, and then if it breaks that low, I get out of the way because you never really know where it's going to go. So you are in control of how much you lose and how you can maneuver. And if you look at BlackBerry, okay, first let me cancel this. Let me go to the daily chart because I want to show you the fact, how it actually works out. First of all, okay, if you come into here not knowing some news was going to be announced, it looked really good, right? You had a gap up after earnings, nice bull flag, got long. This is where I initially got long and got excited about it. And this was your nice momentum trade above the prior pivot. And it looked fine, above the 8-day, holding in there, showing some relative strength. But then you never know when something like this is going to happen. Pow, down to 997. So in the morning call, I talked about this level here, somewhere around 1055. In the first, I would say 10, 15 minutes, that's what it hit. So if you go here, okay, and you look at this, okay, this is all you know. This was the first move. I actually bought a little bit more, went up to almost 11. Started to fail. I actually sold a little bit, went back to what I had overnight. Came back in, then I said, okay, my thesis and my strategy is I get out, I limit risk. If it breaks the morning low, you have no idea where it's going to go. So when it broke 1058, I said I'm out. It didn't fill the gap. It didn't engulf. It wasn't over emotional. There were sellers everywhere. So I got out here, took a loss, which happens in this business, but could have been a lot bigger loss, right? So what happened here? In the first 15, 30 minutes, you had a pivot low, bounce back up, no real buyers, broke this area. You could have got out of 1060 and saved yourself 60 cents, 60 cents. This is like another 5% or so. So don't laugh at that, But again, if I would have bought it here, bought it here, bought it here, bought it here, who knows? I could have hit it out at the close and lost a heck of a lot more money. And then I'm trapped in this thing in something that who knows what's next. Closing the dead lows. You look here, there is some volume attached to it. So it could see lower prices. Look where it came from. So my thesis is I get out of the way. Same way I got out of the way here. You know, I liked it back here. I rode it for a while. Then once it broke this, I got out and I saved myself, you know, multiple months of nothing. So I'm not doing that again. And who knows? Maybe you get a red dog reversal tomorrow or something happens. But this just went from an A play to, you know, POS. No, I'm kidding. But it happens. But again, you come in, you have a plan, you execute on your plan, and hopefully you lose less if you're in a situation that you had no, you just had no clue that was going to happen. And if you did, that means you probably go to jail because someone told you something that they shouldn't have. Anyway, we don't trade like that. We trade with technicals. A lot of the banks, you know, had a little bit of follow through. It's funny. I talked about how, you know, everyone thought Bank of America had to be so good because Citigroup was up and JP Morgan was up and Goldman was up. So I figured, you know, I'm not going to take options in the Bank of America because it looks too easy. When anything looks too easy, it doesn't happen. You know, and then Bank of America was down a little bit. And I think at some point they're going to forget about the report. They're not going to have all these litigation costs the way they do, and it can get going again. You know, if you sold it when it broke the 21-day here, or you sold it on that, you know, false breakout, and you don't take it into earnings, we'll figure out if it could hold this 15.25 and if it's worth, you know, something to do later or not. We shall see. And lastly, the metals, because I got to get out of here. You know, we talked about how mean this was, right? How you had your igniting bar. It then held support going sideways, and then it looked as if it was going to hang in there inside day, and then pow, that happened, and it crushed anybody who was long in this range short term, which a lot of people are, whether they want to say it or not. And then downside follow through, and then today you had an inside day. I still think it's very bearish and hard to trade from an active scenario. If you've been long it since the start of the year, congratulations. That's when nobody wanted to be long it, so I doubt you were. You know, most people, you know, started to think positive right around here, and that's when whatever that happened. So, you know, in closing, I think you can be tactical. There's longs, there's shorts. We're in earnings season. Know what you own. If you're trading things after market, just realize they're thin and erratic. And if you just think something has to go down because, you know, it's a mega cap like Intel. I know a lot of people said, "Oh, I can't lose money shorting Intel." If you shorted Intel on the open, you lost money. If you sold it early and you've been holding on to a big deal, you know, you can't get poor by booking profits. And we'll see what happens over the next few sessions. High beta tech is going to get active. You have Google Thursday, we have Apple Tuesday, then we have Facebook and Twitter. And you look at Facebook, you know, after everything's been said and done, you know, I know Yellen was bashing the internet arena here, but all in all, what did it do? It held the 8-day, nice bull flag. You have a level right in front of it. Put this on your radar. This might break out to the upside. And also, I have HLF short, which is something I don't usually do, but you know what? Had volume, broke a level, day one, underneath the 200-day. So I said, you know what? I probably don't short enough, and I have to look to change a little bit. So I took a little bit of this short overnight. We'll see what happens. If it gaps up tomorrow, I'll be pissed. If it doesn't, you know, whatever. Good book says something goes down on day one on heavy volume, you know, chances are you'd rather be short than long. So I'm trying to add a little tools to my tool chest as markets do change, and you have to be all over the place. And charts are charts. It doesn't matter what sector, what group. If you follow the rules, you know, you can make money anywhere. So I am going to be in Short Hills tomorrow. Someone's doing the morning call, and then I am off to the Hamptons for a little family vacation Thursday and Friday. I will check in. Won't be as active. I'll be on my Twitter, but there'll be no more videos from me. Be well, and I will be in touch. Have a good one.